Hi there, welcome to the closing bell video on the 9th of October. I will be having a chat about a couple of oil and gas stocks that I think are looking pretty interesting. One for a very long-term bet and one a very small cap punt. I'll get to that in a minute, but I just wanted to do an overview of the general market conditions out there after the last week. We had a bit of a U-turn in the equities, and I'll get to that in a minute. But I just wanted to start with the US 10-year bond yield chart and just show you a bit of a big picture view on that, because we are seeing a bit of pressure on bonds with all oil and gas prices really taking off. We're already in a slightly inflationary environment with CPI figures quite high, and soaring oil and gas prices isn't going to help that at all. So I'm just watching the US 10 years, and this is a monthly chart of the US 10-year bond yield. And this is the COVID crash really was here, with the 10-year bond yield crashing from, above 3% early 2019 to a low of around, 0.3, 0.4%. And since then, it really has turned around. And I guess the big question for the market is really what happens if those yields keep rising. I think many in the market are skeptical they will keep rising. So I just wanted to show you my sort of technical view on them, so that you could get a sense of why I think these bond yields are going to keep rising, and perhaps rapidly before long. So this being the monthly chart, going back to, you can see 2008. So it's quite a long-term chart, this one. I just want to bring your attention to this major wave higher in yields from 2012 to 2014, because really it's set up a distribution in prices since then. And how I look at these things, I look at the range that we've got, and I've got my calculations based on the midpoint of the range, which is around 2.2% yield in the 10 years. So that would be the point of control, I call it. That's the point around which the yield is oscillating and has been doing for the past decade. So it's really like a fulcrum for those yields. And over that time, you can see we've had a couple of false breaks of the edge of the range, and that's when you see the reversals around that area, it usually heads back to that point of control. So that's what's happening over and over again. And with this COVID crash, yields fell all the way down to nearly 0.4%. And you'll see here, I've got that calculation, 1.618. So that's like a Fibonacci extension outside the range. And that's just an area where you often will get reversals. You'll see lots of stoppies going off in the market when prices break out of a long-term range, like we've had here. We've had many years of trading in this area, and once that range breaks, that's when the panic can start. But it can reach a point and still be under the influence of that range. And this is really what I've been looking at for the past year in these bonds, having based at the point where I'd expect to see a reversal, and with yields racing higher from there. Now, we did see yields drop for the last few months, but what I want you to note is that red line going above the blue. So you've got the 10-month exponential above the 20-month simple. So on the trend based on the moving averages has shifted. So saying that yields are probably heading higher. And we've also had last month a monthly buy pivot formed there. So yields really are heading higher. And now that we have that all in place, pretty much everything pointing up at the moment. And the thing that's most interesting to me is as we head back into that range from the past decade, I get targets back to that point of control again. So we're at this point where if these yields keep going, and they're at around 1.6% at the moment. And the high in yields a few months ago was around 1.8. So it's only 20 bips away. If the selling continues and we breach that 1.8% level, it may be a fairly quick trip, which would, I think, surprise a lot of people, towards that 2.2% point of control of the last decade of trading. So that's the main thing I wanted to point out, was that we're getting to a very interesting point with these 10-year bond yields in the US. So it really is all about the oil and gas sector for me at the moment, though. That's where the opportunity lies, with lots of those stocks beaten up and unloved, but oil prices really powering from strength to strength, with the gas crisis gathering steam in Europe and Asia trying to get as many supplies as possible. And just on this oil chart we've got here, the Brent crude oil chart, I was saying over the last few weeks, this old high from 2018 is what interests me, because once you really do get close, and we've got a nice strong uptrend developing from the COVID crash lows, now that it has broken out to a new high in the move and is trending, really that old high from 2018 becomes a bit of a gravitational point that the market almost wants to test out before possibly finding a bit of selling pressure. And that won't mean that the overall uptrend won't continue. It's just there's a bit of a high risk once it heads above that sort of $80, $90 region that it could meet some selling pressure. But we're not at that point yet. And we're really at the point where this thing should just continue to trend. And that will probably lead to some buying across the board in some of those beaten up smaller cap oil and gas plays. And so that's why I just wanted to show you a couple of those. The first one I want to discuss is Blue Energy. I'm sure many of you will know about that one. They have a huge amount of gas, over 4,000 petajoules in 3C resources, but it's stranded. So you've got North Bowen Basin, not really opened up yet, but there are plans to build a pipeline. They have MOUs with Origin Energy for 300 petajoules and Energy Australia for 100. So the potential for immense revenue, and they have a hell of a lot of gas, but it's stranded. So they need to move their reserves to 2P, firm up the prospect of the pipeline getting done. And I just think that this one is a slow burn. It may not make you lots of money overnight, but if you had the ability to hold something for a few years, this one could really surprise to the upside. And it's one of those ones that I don't think you'd have a stop loss on it, and you just put the money away and let it go. But technically, it's just coming back to an interesting spot for me, and I just think the prospects of the pipeline getting up and running is higher as this crisis in gas and oil unfolds. So looking at the technical situation, we had a massive run from 2016, 2017 up to around 20 cents, and the heat came out of that. Everyone got shaken out. So here's our second attempt at a rally as the MOU started to get signed, people getting excited, but it got a bit ahead of itself. And really, I'm looking at the long-term trend on this one. We've got the 10-period exponential above that 20-period simple. So the long-term trend has shifted. We're still in long-term trend, but you often get these retests of those longer-term moving averages, and if things can turn back up from there, can be off to the races again. And the retracement that we've seen so far has just gone beyond that point of control. I think if it got down into the buy zone of that wave, it would be a really strong buy for me, down around sort of 3-4 cents. And this may be a factor of, it's going to take a while. If people get bored, it may head down into that zone. But I think long term, you're looking at something that is going to head higher. And you're just going to have to pick up stock over time. But it's just at a point where I think it could be ready to turn back up, especially if we've got a monthly buy pivot. So that's, a monthly close above 6 odd cents. That would look pretty good to me. And closing back above that 10 period exponential on the monthly, that would be a good sign. If we go into the short-term chart, they have had capital raising recently, which has caused a bit of weakness around this area, but the buying is starting to come back in. So they're well funded to do what they want to do. We got a weekly buy pivot a few weeks ago, so we've got the first signs of things trying to turn around. We've got a bit of another shakeout there, so it's just getting closer, I think, to trying to trade a bit higher from here. So that's definitely one, as this crisis unfolds, that I think people will be slowly picking up stock. The final little stock, a little piddler, about 50 million market cap. It's taking off like a rocket at the moment. It's having a huge day today, is Vintage Energy, VEN. And just an interesting little company because they've got a few gas prospects with in the Cooper Basin, some near-term cash flow possibilities. They've also got possible oil chance in Perth Basin, something in the Bonaparte and Galilee, but I think the other major thing is in the Otway, where they've got this Nangawarri CO2 deposit. There's been a massive spike in CO2 prices over in Europe on the back of the spike in gas prices. So that may be why there's a bit more interest coming into this stock. Their deposit could last about 30 years. I won't say that I'm an expert on CO2 markets at all. I'm just looking into them myself. But this one just starting to run pretty hard. It's obviously had a bit of a tough time. I'd say this old low is pretty important, and it's been containing prices. Obviously that's 10 cents, so it's bounced off 10 cents in the past, crashed through it, and has been doing a lot of work. Bit of a cup and handle, I guess. I don't really like those old technical analysis ideas, but it's done a lot of work here. Really the way I'd look at this is to look at that wave up from the lows, and I'd look at that wave up and look down. There it is, down into the buy zone of that area, and from there we've got the monthly buy pivot created there. It did create a little monthly sell pivot there, didn't it? But now it's turned back up and breaking out, so it's starting to sort of trend higher on a monthly basis. It's been heading up for nearly a year now from those lows, so there's definitely buying interest, and it looks like it really is breaking out, so there may be further upside in that one. And this is the daily chart, and look, it's really gotten hot today. It's blasted off like an absolute rocket, so it might be a bit hot, I think. That'll be one to keep on your watch list, and maybe you can pick some stock up around that 8-9 cent region at some point. Anyway, that's enough, I think, for this week. If you're enjoying these, definitely check out what I do down below the video. Just click on the links for Australian Small-Cap Investigator or Pivot Trader, and have a read, have a think. I'd love you to be a member if you'd like to do some trading with me. All right, well, that is enough. I'll come back with more next week. Cheers.